Shares of Meta down 6.1%. The company narrowed its full year capital spending forecast. It boosted the lower end of the to $130 billion from $125 billion. But it was also the midpoint of Meta's third quarter revenue forecast that missed analyst estimates, feeds into concern that Meta's revenue isn't climbing fast enough to keep up with its spending. Kurt, is that what is moving the stock in the after hours, those two things?
Yeah, I think it's a combination of those things. It's, with Meta, as with all these companies, as long as they're printing money and the core business is growing, they can kind of get away with this aggressive AI spending and on all of these data centers. The minute you start to worry, even if it's subtle or slight, that there might be a little bit of a slowdown on that core advertising business, now suddenly you start to question, well, should you be spending so much on all of the AI infrastructure? So I think there's a combination of that. There was also a note in their release that they are raising their total year expenses. They're at least the floor of that range as well, in part because of the legal fees that they're having to incur. You may recall, I think we've talked about that they are fighting all these legal battles around addiction and youth safety. And so they said they're spending, $2.4 billion this year just on legal related expenses. And so obviously that raised some eyebrows as well.
Anytime they say it's material, right, Kurt, you got to kind of sit up a little bit straighter, because that means there's an impact, and it may not be over potentially.
No, and in fact, far from it. They have thousands of lawsuits that are waiting in the wings. They've only gone to trial for a few of them. They're settling some of them. So, this has the potential to be a very expensive legal dispute for them in the long run.
We're saying goodbye to our Mandeep Singh.
He's got to go write some research.
He's got to write some research, but we so appreciate him. Always.
Kurt, what are the questions that Mark Zuckerberg needs to answer? Specifically, I guess I'm wondering about the enterprise side of this and like what the enterprise opportunities could be.
Yeah, give us specifics, Mark.
Yeah, exactly. I mean, he flicked in his opening remarks that there's a potential for them to sell cloud computing capacity. That's something that we've reported on, that my colleague Riley Griffin and I broke some news about earlier this month. So he is sort of confirming that that's something they're thinking about, confirming that that's a plan in the works. But I imagine he'll get some questions about that once they open the call up to analysts. I think the other thing is just, is there ultimately like a ceiling here on this spending? Obviously for 2026, we know their CapEx range, but beyond that, I mean, there are hundreds of billions of dollars that he's sort of earmarked for this project. Like, when do they start to see the real return on that investment? And is there a limit to how much he's willing to spend? I'm sure he's not going to put a number on it today, but I also think that's the type of thing that people want to know about.
Well, we've got a listener and viewer in Dubai. Asif is sending in, and on that, we've got this new feature, Kurt. It's really cool. It's exclusively for Bloomberg.com subscribers and terminal clients. And they've been sending questions to Bloomberg.com/AskRadio. But it gets into kind of just the records amount of CapEx that folks are spending generally when it comes to AI. I don't think it's necessarily specific to Meta. And he's asking, someone is going to get the money, so is the marketing missing something here? Like, we keep going to this, certainly with Mandeep. It's like, are we missing something? The circular financing, the spend, the ROI. When you look at Meta, and just generally what's going on in this AI spend, how do you see it when you continue to report all this stuff out?
I mean, the best I can kind of maybe think about it is, sometimes when people want to buy a house in a market and they think, gosh, this feels really expensive. And, the rationale is perhaps, hey, maybe 5 years down the line, I'll look back and be very happy that I bought my house when I did, because everything is going up. And perhaps that's the feeling here, right? Is that eventually everybody is going to be using these AI tools and services and needing to power these things. And it feels expensive today to go build these data centers, but in 5 years, they will be very happy they did, because the demand is going to be so high that it will look like a cheap investment for them. That's got to be the rationale at this point. Now, the question is, do you get to that point in 5 years or not? We obviously don't know the answer to that, but I have to think that when you're saying we're going to spend $250 billion, for example, on a single data center in Louisiana, you obviously feel that that's going to be recouped at some point, and that's only going to be possible if people adopt AI products in the way that someone like Mark Zuckerberg believes that they will.
Can I just say though, that right, this is the tough thing for all of these companies. It's like a little bit of FOMO. Like, what if you miss it? What if this is what everybody kind of markets it as and sells it as, and it is this life-changing thing that everybody's going to be using?
That makes sense for a company like OpenAI and a company like Anthropic, but Kurt, it doesn't make sense for a company like Meta, because the product that they have that uses AI is the one that just keeps us glued to the screens and serves as ads, right?
Well, Mark Zuckerberg would probably disagree. He actually, I was in the room when he had a sit-down interview with our very own Emily Chang a few summers ago, and he actually said, I would much rather overspend and be wrong betting on this than wake up in a few years and realize we underinvested. And so he's willing to lose a little money to make sure they're in position. Now, you have to remember what's driving this a little bit for Mark Zuckerberg is that he's someone who has built his entire business on the backs of other platforms for distribution. So what I mean by that is, you can't access Facebook and Instagram unless you got an iPhone or an Android phone. He's very reliant on Apple and Google in that way. I think he believes that AI is this next, computing platform, whether it's physical hardware or not. And he does not want to have to rely on OpenAI's models or Anthropic's models to get his products out there.
Got to make sure the eyeballs are still coming his way. I mean, essentially, right? And not going somewhere else.